Alrighty. So here we go again, right? Yeah. Yeah, I should be online already. So sorry about the inconvenience, guys, with my audio once again. I don't know what's wrong with my laptop. There you guys are. Yeah, guys, I don't know. I am live stream. You guys know that I do live stream throughout the whole trading session for the guys of my Patreon. And I don't know. I mean, maybe my laptop is, I don't know. It isn't working properly. So at this time of the day, it needs it needs to take a rest. But we're back, okay? Awesome. So thanks for your patience. Okay, so we were talking about AMD, guys. So let's keep talking about AMD. Let's pick up where we left off. Um, I was showing you an anchor value weighted average price that is very interesting, guys. Let me show you over here, AMD. Advanced micro devices. So take a look at this anchored volume weighted average price, this white line that you guys can see over here. This anchored volume weighted average price comes from none other than the all-time high of AMD, which was hit on December of 2021. Take a look at the spot at which the bulls found support at. $95, guys, exactly on anchored volume weighted average price that I just told you guys about. So very good job for the bulls over there. They were able to defend a very important spot. And to the upside, guys, take a look at this other AV WAP at $808. This anchored volume weighted average price comes from the second to last earnings report of AMD, from which the stock of this company shot up higher. And this AV this anchor volume weighted average price signals $109 approximately. So to the upside, keep an eye on $109, and in the case that AMD happens to pull back once again, $95 is a very important spot for advanced micro devices. On top of that, guys, take a look at how over here we can notice the convergence of this red line that you guys can see over here. This is an upward sloping 200-day moving average, right at $95. So we had the convergence of two very important prices, or two very important indicators. Let's just put it that way. Let's say indicator. That sounds better. That sounds more correct. An upward sloping 200-day moving average right at $95, coinciding with an anchor volume weighted average price that comes from the all-time high of AMD. So we can make the case that any retracement of AMD, if we happen to have, you guys know, a worse than expected core CPI, core PCE report coming out tomorrow, or whatever happens, if we keep seeing volatility in the markets, $95 is a spot in which the bulls are very likely to put on a good fight against the Bears. And to the upside, I already told you, this AV WAP is signaling 100, let's say for argument's sake, $109. And we have, take a look, guys, at $109 as of now, because you guys know that the moving averages, the price that the moving averages signal change every day. But as of now, the anchor volume weighted average price that comes from the second to last earnings report of AMD is coinciding with this upward sloping 100-day moving average right at $109. So you guys can expect, if let's say that AMD keeps going up tomorrow or maybe on Monday, or for two consecutive trading sessions in a row, $110 is going to be a very important spot over here. And the bulls, by the way, guys, fell today right at this 20-day moving average, this pink line that you guys can see over here, at 104. Yeah, we can round it up, $104. So if tomorrow the bulls can consolidate above $104, that could be signaling that we have two potential gaps to the upside. The first one up to 107 bucks, which happens to be a previous support back from early August, and the second one up to this upward sloping 100-day moving average that is coinciding with an anchored volume weighted average price that comes from the second to last earnings report of AMD, which is a very important and significant date for this stock, because once this second to last earnings report came out, the stock of this company shot up higher. So we can make the case that the bulls are making progress over here, but consolidating above 104 bucks would be bullish behavior. It would be in the bullish camp behavior category. Okay, Alvaro, don't forget to check IDI. Okay, perfect. Not a problem. Tesla, please. Vania Psychicos. Okay, let's go ahead and take a look at Tessie. I got a pie in the face over here today, guys. I got puts, and I'm under the water, but I got October 20th puts. So I'm still being patient. Let's see what happens with Tesla. Take a look. If we take a look at the 4-hour chart, so the stock of this company went up today 2.44%, and it closed the trading session at $246.38. So the bulls managed. I mean, this was my bearish thesis today, guys. They broke the 100-day moving average to the downside. And I was like, okay, we have a downward sloping 5-day moving average. That implies that sellers are in control of minor time frames. And on top of that, I saw when Tesla broke to the downside, this upward sloping 100-day moving average. And I was like, okay, I'm going to grab puts. But I got a big pie in the face today. Let's see what happens tomorrow. So very good day for the bulls, because they defended in a successful way this upward sloping 100-day moving average. They also were able to hold as support and then close above this downward sloping 5-day moving average. So very good day for the bulls. Unluckily for me. So what could be happening over here in the case of Tesla? Very important spot, guys. This downward sloping 5-day moving average at around 244 bucks. If the bulls can consolidate above this area, let's say 244 bucks, then we have a potential gap to the upside up to this 20-day moving average, $257-ish. We can round it up. So from 245 bucks ish up to 257 bucks, this could be a 5% profit trade. And in my case, and as of now I am under the water, I am going to be hoping for the bears to be able to break these two moving averages to the downside. So let me zoom out over here once again. Yeah, and take a look, guys. We also have, if Tesla happens to pull back, say that they lose once again this 100-day moving average at around 241 bucks. They found support today at 237 bucks. I was actually green in my puts for something like, I don't know, 15 minutes, and then Tesla shot up higher. So take a look at this area, guys. 237 bucks. This area acted as support yesterday and today as well, but this is also a previous support for Tesla back from late June. So very important spot over here at around 237 bucks. So if you are a bull, guys, you want to see Tesla tomorrow consolidating above or further consolidating above this 5-day moving average and potentially making this push higher up to 258 bucks. And if you're holding puts like me, then you want to see these two moving averages being broken to the downside tomorrow, and the bulls not being able to find support once again at 237 bucks approximately. So what do you know, guys? I'm on here. Okay, let's take a look at, let me take a look at the market structure of Tessie. What is going on over here? Supply and demand. Wow, take a look, guys. I already took a look at the market structure of Tessie. This was one of the reasons why I grabbed puts, aside from the fact that the bulls lost earlier on today the 100-day moving average as support. Take a look at the demand. Remember, guys, and for those joining up the stream. On top of this chart, we have the demand, and at the bottom, we have the supply. Take a look at the demand. It is collapsing. So buyers are, or were, let's just put it that way, because this situation could have been reversed today. Buyers are walking away from TESI, and the supply is also decreasing, which is hopeful for the bulls, but the supply earlier on today was a bit above the demand. So it was like, okay, we have more sellers than buyers. Tesla is breaking the 100-day moving average to the downside. I am going to grab puts, and guess what? The trade was run. Was run today. It could be spot on tomorrow. We'll see what happens. So, from a market structure standpoint, I would say that we still need to see the demand climbing back up or starting to go higher. That isn't the case. So that leaves hope on the table for the Tesla. I only grabbed one put, by the way. That leaves hope on the table for the Tesla put that I grabbed today. Let me see. You can use a cash account with any amount of dollars. Yeah, you can open a cash account on Robinhood with any amount. Sure. That is correct. Yep. Okay. What other requests do I have over here? 235, please. Sonic says. Okay. Tesla will rise going into earnings on the 8th of October. Once some news drops of Cybertruck, it will pop every time an article surfaces. I don't know, guys. Elon is full of shit with the Cybertruck. He said that they were going to start the deliveries of the Cybertruck during the fall, and I haven't heard anything about the Cybertruck. Like zero. SoFi. Let's go ahead and take a look at SoFi. This is a stock that I had on my watch list today. The short looks kind of acceptable because the bulls were able to recapture the 5-day moving average, and we still have an upward sloping 200-day moving average. So SoFi went up today 2.24%, and it closed the trading session at $7.77. Sorry, $7.77. I was thinking, guys, about the student loans, right? So I guess that the student loans are going to be resumed in October, and SoFi is supposedly going to be one of the beneficiaries of the refinancing of those loans. So maybe we could see SoFi going higher based on that fact. The short still need to. Oh my Jesus, sorry about that, guys. I still getting WhatsApp notifications. So the bulls made some good progress today by closing the trading session above the 5-day moving average at $7.57. So we have, if the bulls can consolidate, and let me zoom in here. If the bulls can consolidate slightly above this 5-day moving average, which is still downward sloping, that's not a good sign. But the bulls managed to close above this level. So if the bulls can consolidate above $7.60 tomorrow, they could be gathering momentum in order to fill this next gap up to this upward sloping 100-day moving average. So if we were able to take this trade, guys, with SoFi holding $7.60 as support, from $7.60 ish up to $8.08, guess what, guys? This would represent a 6% profit trade. Nothing to sneeze at. Very important spot. On the flip side, if the bulls cannot hold if the bulls cannot hold as support this 5-day moving average around $5.50, there's room down to this upward sloping 200-day moving average at around $6.90. So this is going to be a pivotal spot for the bulls tomorrow. Put this number down on a sticky note, $7.50. Very important spot from my in my opinion. Yep. So let's see what happens with SoFi tomorrow. Let me take a look at the market structure of SoFi. Let me see what the supply and the demand is looking like. Let me see. Wow, take a look, guys. The demand and the supply of SoFi look horrible. So the demand is collapsing and the supply is rising and above, way above the demand, and way up, and it is actually above average. So I don't know, guys. This could be a bull trap, and I think that SoFi has gone up for 2 consecutive trading sessions in a row. For 2 consecutive trading sessions, yeah, that is the case. So yeah, I mean, this is an easy one, guys. Let me zoom in once again. If the bulls can hold this 5-day moving average as support, we have higher prices coming up. And if they lose this support around $7.60, then we could be shorting the stock of this company from $7.50 down to $6.90. This would represent a 10% drop for SoFi. Figure that on put options. This would be a super nice trade. Do you think we will see back under 400 in the SPY like last year going into this week of the year? Puts was on fire last year. I mean, I don't 400. That's a lot. I mean, I don't see 400 anytime soon. I would say, right? I mean, let me pull up once again a chart of the SPY over here. Let me see. You're looking at 400. I mean, that would represent from today's closing price of the SPY. This would represent a 7% further drop for the SPY. I don't know. I mean, that's a lot. But if the 200-day moving average, which as of now happens to be upward sloping, near $418 happens to be broken to the downside, yeah, I mean this would imply that the character of the markets would be changing, and the markets are going to be thinking about the economy getting worse and stuff like that. That maybe a soft landing isn't actually going to occur and stuff like that. So if this 200-day moving average happens to be broken to the downside, yeah, maybe 400 bucks could be coming up. But mind you, guys, during the last 4 years, September has been a negative month, and in both November and December of the most recent 4 years, the markets have gone higher. That doesn't necessarily imply that that is going to be that is going to be the case this time around. But I don't know. It is too early to tell if we can see 400 bucks in the SPY this year. It is certainly a possibility, but I mean, too many things would have to occur for that scenario, uh, for that scenario to play out. hmm I'd like to hear how you use RSI to indicate corrections. That's why I've been thinking with it, guys. I don't rely a lot on the RSI. That's an indicator that I don't like. There's no way to tell when a stock is either oversold or overbought. So, I mean, I would strongly advise you guys to don't rely. I would advise to you guys to don't rely a lot on the relative strength index. A lot of traders talk in terms of overbought stocks and overbought, indices and oversold indices and oversold stocks, and there is no way to tell when either a stock or an index is either oversold or overbought. So I use the RSI mostly in order to kind of reconfirm when we have a very overextended condition to either the upside or the downside. But do not rely on the RSI. I don't know. Let me pull up what chart can I pull up here that is very overbacked. I don't know. Maybe the Dixie. Let me take a look at the chart of the US dollar. I mean, it is no longer overbacked, quote unquote. I don't know what other chart. I don't know. Target maybe is that a stock that has a very low reading of the RSI? Take a look at take a look at this. The RSI is sitting at 22 points on the 4-hour chart, as you guys can see over here. But take a look. The RSI was at 27 points, very low from an RSI standpoint, when Target was trading at 117 bucks. So I guess that were a lot of people out there trying to catch a bottom on Target based on a very low reading of the RSI. Oh, the RSI of Target is at 23 points, and this stock has been dropping like a rock, so Target is very oversold. Let's buy the dip. It is going higher. And guess what happened, guys? The RSI was at 23 points when Target was trading at 116 bucks, and now Target is trading at 108 bucks. The fact that the RSI was very low didn't imply that the stock of this company, or didn't, let's say that, didn't make the stock of this company to bounce back up. I just people have it on their shirts. But guys, believe me, the relative strength index is the technical indicator that has had the greater amount of people losing money in this business. So don't rely on it. Again, and I have it on my chart. I mean, I take a look at the RSI often, but I do not take I don't make trading decisions based on the RSI. I use it in order to kind of, as I just told you guys, reconfirm when a stock is either very overextended to the upside or the downside. Okay, but do not rely on the RSI. And when you hear someone saying that this stock or that stock is oversold and overbacked, ask them, how can you tell for sure when a stock is overbacked or oversold? It's bullshit. There's no way to tell it. It is impossible to tell it. Okay, Arista Networks. I'm being asked over here. Let me see. A net. Arista Networks. Okay, it went up today 1.56%, and it closed the trading session at $184.43. So sellers were making progress over here because we have a downward sloping 5-day moving average, but the bulls were able to close today's trading session above this 5-day moving average, so above $180. So in minor time frames, the sellers were stepping in and starting to gain ground, but today they were defeated by the bulls. So this is kind of encouraging. However, in major time frames, guys, we're still talking about an uptrend. We can see over here an upward sloping 200-day moving average and also an upward sloping 100-day moving average. So what could be happening in the case of Arista Networks in the upcoming trading sessions? If the bulls can consolidate above this 5-day moving average, which is starting to rise, so slightly above $180, then that could imply that they are gathering momentum in order to fill or to, let's say, complete finishing this next gap to the upside, because they closed today at 184 bucks. So they could be completing this next gap to the upside up to 187 bucks. $187 is a previous resistance back from late August, and this is also a previous resistance back from mid-August as well. So as long as the bulls remain trading above 180 bucks, this is a good sign. And if they can, actually, this is a very volatile stock, by the way, guys. If they can burst above 186 bucks, then there's a second gap to the upside up to another former area of resistance at 190 bucks. $190 is a previous resistance back from early August. So these are the levels that I am seeing over here in the case of Arista Networks. And maybe a short could be on the table, guys, if the bulls lose as support this 5-day moving average at $181.50-ish. So very important and pivotal level for Arista Networks, $181.50 approximately. Let me take a look at the market structure of a net Arista Networks. Let me see over here. Arista Networks. Take a look at the market structure, guys. It looks horrible. And somehow we can reconcile this information. Again, on top of this chart, you guys can see the demand, and at the bottom, you guys can see the supply. Demand buyers, supply sellers. We can reconcile this with the profit taken that we saw since early September. So sellers were gaining control of Arista networks in minor time frames, as you guys can see over here, because the demand was dropping and the supply was rising. And apparently, since the bulls are ready to capture the 5-day moving average, then we might be about to see the demand starting to rise over here. So we might be about to see buyers once again stepping in over here. But as of now, we have more sellers than buyers from a demand and supply standpoint. So it is imperative for Arista Networks to be able to hold 181 bucks as support if you guys want to go long Arista Networks Incorporated. Yeah, I struggled poorly today and maximize my day trades. I am just having a hard time navigate this day trade rule. I mean, day trading is hard, guys, and most of you guys trade like 0 day to expiration stuff. So you need to apply tight stops, and the markets are behaving in a very choppy way. So if you deal with very tight stops, you're going to be you're going to get stopped out left and right. That's why I don't deal with shorted expiration options. So I can have like a let's say a wider range in order to see if my uh, trade is either wrong or right. But I mean, it happens. So I'm trying my best, guys, to help you guys on Discord, and I'm very happy today because most of you guys let me know that you guys are finding value in my post, and you're actually making some money. So that's good. Popeye, ask about T triple Q, bro. T triple Q is a leverage ETF that tracks the triple Q. So first of all, you shouldn't be holding T triple Q. You guys know that this is a leverage ETF, so it decays over time. This is an instrument that was created for day trading and overnight trading exclusively. Okay, if you hold T triple Q, either calls or shares or whatever it is, for longer than 2 or 3 days, you are already losing money. It has like some sort of theta decay, so to speak. In the case of the triple Q, guys, it went up today 0.84%. The bulls were able to recapture this 5-day moving average at $356.70. The next potential stop to the upside is going to be this upward sloping 100-day moving average at 362 bucks. So if you're holding T triple Q, whatever, either calls or shares, you just want to see the bulls holding, in the case of the triple Q, 357 bucks. Let's just round it up. And gathering momentum in order to make another push higher and maybe being able to fill this next gap up to the upward sloping 100-day moving average at 363 bucks approximately. By the way, guys, recapturing and bursting above this 100-day moving average that is upward sloping around $362.50. This would be a major win for the bulls of the triple Q. So scenario. Oh my God, my WhatsApp messages keep popping up. Sorry about that, guys. Okay. Let me see what other I have. ADI. I don't know this stock, guys. ADI, analog devices. There you go. It went down today 2.08%, and it closed the trading session at $176.41. This is not a good-looking short, guys. Below the 100-day moving average, below the 200-day moving average, downward sloping 20-day moving average, downward sloping 100-day moving average. But the bulls managed to recapture today the 5-day moving average, which is signaling as of now $173.50. So this is positive for the bulls. So for the most part, guys, in most of the stocks that I have broken down for you guys today, we have we have a similar pattern. Most stocks were able to burst above their 5-day moving averages today. So if that level can be actually held as support tomorrow, that's a good sign. That could be signaling that the bulls are gathering momentum in order to fill this next important gap up to the downward sloping 20-day moving average at around 178 bucks. So from 100, let's say that we open a trade over here, guys, slightly above this 5-day moving average, so at around 175 bucks ish, up to this 20-day moving average at $177.50. This would be a 1.25% profit trade. So this is encouraging for the bulls, and you gotta be careful because this is still this stock is still downtrending. So you have to be careful over here. Let me take a look at the market structure of ADI. Let me see. Analog devices. What do I have over here? So the demand is stable and the supply is starting to rise slowly but surely, and it just burst above average. So we can make the case that this is a tie from a demand and supply standpoint. So this stock could be going either way. So I mean, I wouldn't touch analog devices below this 5-day moving average. And if it happens to consolidate above $174.50, and the markets, you guys know what I'm talking about, and if the markets as a whole are going higher and stuff like that, if the Dixie and the 10-year Treasury yield are dropping, then I would be maybe interested in starting a trade on ADI. I'm better late than never today. Hello, Leslie. How are you? SHD. SCHD. Let me see over here. SCHD. Schwab. Take a look, guys. It went up today 0.52%, and it closed the trading session at 71 bucks. Charles Schwab, guys, regional banks. I think that there is another shoe to drop over here, guys, but I mean that's a whole different story, right? The technical chart looks very crappy. I wouldn't touch Schwab. I mean, I don't want to deal with regional banks at all. I mean, this is not a regional bank. This is a broker. You guys know what I don't want to deal with banks in general terms. Let's just put it that way. I wouldn't touch Schwab unless the bulls can recapture this 100-day moving average at $72.65. They managed. They couldn't close. They could not even close today's trading session above this downward sloping 5-day moving average at $71.10 ish. This is a no touch, guys. I am not interested in Schwab or any other bank by any stretch of the imagination. So very crappy chart, guys. Yeah, this is a major downtrend. I would simply stay away from Schwab until at least I see the buyers showing some strength by maybe bursting above this 100-day moving average at around $72 and I don't know 70 cents ish. So yeah, just stay away from Schwab. I mean, let me see if the market structure says anything positive about Schwab. SCHD, let me see. SCHD, is that the ticker? SCHD, yeah. I should have Schwab available, right? Let me see. Yeah, I should. Schwab. Schwab. But that's SCH. This is Schwab, right? Strategic. But this is an ETF, guys. This is not the stock itself. My bad. I mean, regardless of that, just stay away from that. This is a dividend ETF. It looks crappy, guys. So I don't know what happens if Schwab goes kaput. Who is going to pay you guys this dividend? Just stay away from from anything Schwab related. Let's just put it that way. All right. How about Nvidia, Emily? Sure. Good day for Nvidia. It has been going higher for 2 days. It could be a leading indicator, guys. And the semiconductor ETF, the SMH also went higher. I already did the SPY, Kobe, in my previous stream, which, went south because of the audio. But I can tell you guys once again the areas of interest that I am going to be keeping an eye on tomorrow. So NVIDIA goes up 1.46%, and it closed the trading session at $430.89. Guys, take a look at this. Take a look at how the bulls defended this upward sloping 100-day moving average. Very, but very impressive. Huh? On 1, 2, 3, 4, 5, 6, 7 trading sessions in a row. I have told you on multiple occasions, guys, the slope of any moving average is extremely important. If a moving average is upward sloping and it is visited and it is tested as support, it is very likely to be able to act as such. And NVIDIA is a very good example of that. So very good job for the bulls. They not only held this upward sloping 100-day moving average as support, but they also managed to recapture the 5-day moving average, which is starting to rise little by little. Very good job for the bulls over here. If they keep going higher, the next important gap that I can see in the case of NVIDIA is going to be $440.50. This is a previous resistance back from late June. And this is also a spot in which we can expect maybe more, let's say, supply than demand. So NVIDIA could be kind of retracing down from this area. Very important. This is a very easily identifiable a potential, let's say, area of supplier resistance at around 441 bucks, which is, by the way, also a previous support back from early August. So to the upside, we have a big level here for the bulls. Let's say 440 bucks. This is actually the level. And to the downside, guys, tomorrow we could see a retest of this semi-ascending 5-day moving average at $423. So let's say that NVIDIA retraces down to 423 bucks, and if the bulls can hold once again as support this 5-day moving average again at 423 bucks, this could be a spot from which NVIDIA could be bouncing back up. And if it happens to be able to fill this gap up to 440 bucks that I just told you guys about, this would represent a 4% profit trade. So sellers were doing a very good job here, guys, because the 20-day moving average was broken to the downside, because we had until yesterday a downward sloping 5-day moving average. But now the tide is turning in favor of the bulls. So maybe if the markets as a whole keep going higher, NVIDIA has an appointment with higher prices, I would say that it could be potentially having an appointment with $440 approximately. Let me take a look at the market structure of NVIDIA. Let me see. NVIDIA. There you go. So take a look at what a crappy demand and supply look for NVIDIA, guys. So the demand collapsed, but the supply is starting to drop, which implies that we started to see some sort of sellers exhaustion over here. And since sellers were starting to get exhausted, and we can make the case that are getting exhausted still, maybe 440 bucks is coming up for NVIDIA, guys. This is a constructive short for the poster child of artificial intelligence. There you go. Okay, we have TTD. That's the trade desk. I think this is going to be the last one, guys. We are 39 minutes in. Wow. We have done a bunch of talks. We have gone over a bunch of talks over here. I know when we went over the Qs, it is similar trend for TQQQ. Yeah, the TQQQ, guys, basically multiplies times 3 whatever the Qs do. It is a leverage ETF. Okay, so if the Qs go up 1%, and you guys know that the Qs track the Nasdaq 100, if the Qs go up 1%, the triple Q is going to go up 3%. On the flip side, if the Qs go down 1%, the triple Q, the T triple Q, is going to go down 3%. It is a leverage ETF, and again, that is not a swing trading vehicle. Be very careful, guys. That's a leveraged. That's a leveraged ETF. If you go through the prospectus of the ETF itself, you're going to see that it very clearly states that that's a day trading or overnight trading vehicle. You guys cannot buy TQQQ and hold shares or buy calls and hold them for, I don't know, 2 or 3 weeks because it decays over time. You have to be very careful with leveraged ETF. The trade desk goes up today 3%, closes. The trading session at $77.69. Take a look, guys. Pretty much the same pattern that we have been seeing today on most of the stocks, if not all of the stocks that I have broken down from you guys today. So the bulls recaptured the 5-day moving average. That's a good sign. In the case of the trade desk, the bulls even recaptured and burst above this upward sloping 100-day moving average. This is a good sign as well. And now there's a gap. There is unfinished business up to the 20-day moving average at $80. So very good, very good job for the bulls. When they were able today of recapturing this upward sloping 100-day moving average. So I would say that in regular market conditions, if the core PCE tomorrow doesn't happen to come out way worse than expected and stuff like that, if the cooks of the bureau deliver a very good core PCE report for the bulls, if the trade desk happens to consolidate above $78, no, let's say $77.50, that would imply that the bulls could be potentially gathering momentum in order to fill this unfinished business gap up to $80. This would represent a 3.64% profit trade. Very good job for the bulls over here, guys, because the bears were doing a very good job. They broke to the downside this 20-day moving average. The 5-day moving average were downward sloping, and they also broke to the downside this upward sloping 100-day moving average. So they were making a ton of progress, but within the last 3 trading sessions, the bulls said like, okay, that's it, that's enough, we're going higher. So if $77.50 happens to be hold as support, I can easily see TTD filling this gap up to $80. No problem. So we're talking about an uptrend, guys. We can also see over here an upward sloping 200-day moving average. Let me reconcile the technical chart with the market structure of TTD, the trade desk. Let me see, what do we got here? Not a good looking demand and supply chart. The demand is collapsing, but take a look, guys, at how, remember, demand buyers, supply sellers. Take a look at how the supply is starting to drop. That implies that we saw as well in the case of TTD that a process of sellers exhaustion could have started 2 or 3 days ago. So maybe we're about to see $81 in the case of the trade desk sooner rather than later. Okay, the SPY. Before I wrap it up, guys, and remember, I am going to be calling balls and strikes tomorrow on Discord. I am going to be pointing out the most important areas of interest that you guys need to keep in mind in the case of the SPY, so you can make your own decisions, because I am showing you guys how to fish. $428.55 is an area in the SPY that happens to coincide with 4,300 in the S&P 500. Extremely important level. And on top of that, $428.55 happens to be a previous resistance back from early June. So this is probably going to be, unless we see a lot of volatility once the core PCE report comes out, this is going to be a pivotal spot for the SPY tomorrow. $428.55. If the bulls open the trading session above this level, that implies that regardless of whatever the cooks of the beauty deliver tomorrow with the core PCE report, the markets liked it. Below 428 bucks and 55 cents, that implies that the market didn't like the report. And if that were the case, I am going to be pointing out areas of interest to the downside. That's it, guys. I meant 420. Ah, okay. I saw 400. It was like, wow, 400 bucks in the SPY. Yeah, maybe if this 200-day moving average happens to be broken to the downside, who knows? That could be the case. Guys, sorry about the audio incident. I am moving out, by the way. Next Saturday is going to be my last stream in this studio. I got new equipment. Take a look. Take a look at this mic. But I need to, set up this is the new stuff that I acquired. So this audio incident is no longer going to happen once I move out. So sorry about that. And thank you guys once again for joining me. And let's keep making money, guys. Thank you very much. Enjoy the rest of your day. Take care. Bye. Thank you. Bye, guys. Take care. Thanks.